Do you know what an investment declaration is? Or did you know that investment declaration and proof of investments are two different things? Are you wondering what is the due date for investment declaration and when do I need to submit it to my employer? Or how to make these investment declarations? Then worry not, because this is exactly what we at ClearTax strive to do, that is simplify tax and finances for you. Hello and welcome, I'm Ekta from Clear. If you want simpler explanations on tax and finance topics, then do not forget to subscribe to our channel. Your HR is all set to send you an email asking you to submit investment proofs for financial year 22-23. Let us discuss everything about investment proof submission in detail in this video. Let's address your first question. What is investment declaration? Investment declaration is a process where you must declare all your tax saving investments to your employer twice every year. Once in April, May, and the second happens in December, Jan, which is now, so that your employer can compute the TDS correctly. If you fail to submit these proofs, you will risk a higher TDS cut from your salary in the month of Jan to March. So a higher TDS cut will leave you with a lower take-home salary. Let us break the entire IT declaration process in 4 simple steps. Step 1, that is your first declaration, where you declare the estimated investments like LIC, home loan, ELSS at the beginning of the year, that is April, May. And you do not need to submit any proof to your employer, as this is just a declaration of your plans saying I'm going to invest this much in XYZ tax saving instrument, so please deduct tax only on the balance salary. Now comes step 2. Now your employer will calculate tax after considering your declarations, and now this tax will be deducted from your salary every month and the balance will be transferred to you. Now let's come to step 3. We may not stick to our initial plans, right? So therefore at the year end, that is December to Jan, you will be asked to submit all the proofs for all the investments to support all the declarations that you've made at the beginning of the year. Now coming to step 4. Based on all the proofs that is received by the employer, the payroll department will calculate the actual taxes. If there's any difference between the initial plan declared and the proof submitted, the additional tax will be adjusted in the next 2 months' salary, that is Jan to Feb salary. And in case you wonder as to why my salary in Feb March is low, then this is the reason, because if you fail to submit your investment proofs, then a higher TDS will be deducted from your salary. Investment declaration is to be made twice every year, like we discussed earlier, once in April to May and the second in December to March. It varies from company to company, but you must have received a mail from your HR department. In the very same mail, the due date shall be mentioned. So you must submit your IT declaration within those cutoff dates. Now that we have covered investment declaration, let us look at various proofs of investments that you will need to submit to your employer. Before that, it is important to know that these tax-saving deductions shall not be available if you opt for new tax regime. They are available only under the old tax regime. You can use our calculator, which is linked in the description box below, to find out which regime is beneficial for you. The calculator will automatically tell you both the calculations under old tax regime and new tax regime and the beneficial one for you. What proof of investments can you submit to your employer? Let us discuss that in detail. If you have made investments in Public Provident Fund, that is PPF, then the proof that you will need to submit is a stamped deposit receipt or the passbook, which clearly mentions that it is a PPF account. In case you invest in ELSS mutual fund, then you will have to submit the investment certificate in your name with the date of investment amount, the type of investment, etc. Also, one thing to note here is, if you're submitting proof in Jan and you also plan to continue the SIP for Feb and March, you can declare it for those months as well. In case you've taken a life insurance policy for yourself, for your spouse or your children, then you can claim the premium amount as deduction under ATC for up to Rs 1,50,000. But the only condition is you will have to submit the premium receipts to your employer. And in case you have a tax saving FD which has a lock-in period of 5 years, then you will need to submit the bank passbook or the deposit receipt. Next is, in case you wish to claim house rent allowance, then you will have to submit the monthly rent receipts, the rental agreement, and if your total rent amount exceeds Rs 1 lakh, then you will have to also submit the PAN card of your landlord. And in case you've serviced a home loan, then your interest certificate from the bank must be obtained and submitted to your employer, which will mention both interest and the principal amount. Note that you can claim the deduction of interest under Section 24B and the principal amount under ATC. And in case you're a first-time home buyer, you can also avail additional deduction under ATEEA. And in case you've invested in National Savings Certificate, that is NSC, then you can provide a copy of that certificate to the employer. And in case you have paid tuition fee for your children to any educational institution, then you can claim that as deduction as well under ATC by submitting those receipts. In case you have a post office term deposit, again you will need to submit the deposit receipt or the passbook. Now let's talk about ATD, medical insurance premium. If you have a medical cover for yourself or your spouse or for your dependent children or your parents, then you can claim the deduction under ATD. And one more thing to note is, if you have undertaken any health checkup during the year, then up to rupees 5,000 can be availed as deduction. So you can claim it by providing the bills. And in case you have taken higher education loan, then you can claim the interest as deduction under ATE. You will have to submit the bank certificate mentioning the principal and interest amount. And in case you made any donations, then you can claim the deduction under ATG by providing valid receipts to your employer. In case you're claiming any deduction under ATU or ATDD for any disabled dependents, then you will have to submit the declaration in Form 10(1)A, which is a certificate given by competent medical authority stating the percentage of disability. Now let us address some common questions you may have. The very first question is, I've joined in the middle of the year. How can I make investment declarations as I've missed the April-May period? You do not have to worry about it because your HR will ask you to make IT declaration at the time of your joining. So you can do it in the month of your joining. The next question is, I have changed jobs during the current year. Will my previous declaration continue? No, please do not make this mistake as the declaration is employer specific and does not carry over. Make sure to submit the details to your new employer as well. Make sure to submit all the details to your new employer and also mention all the previous employer details like the tax deducted earlier, the EPF amount, etc. Otherwise, you will end up getting 2 times the deduction or standard deduction and the basic exemption limit, which will reduce your taxable income and lead to a huge interest and penalty amount at the time of filing ITR. Let's discuss the next question. Can I make new declarations during the year end which I did not declare earlier? Yes, you can make fresh declarations at the year end, but the only condition is that you must also submit the proof for it. Coming to the last question. What if I forget to submit my proof of investment and the employer deducts higher tax? I have actually made those investments. Shouldn't I get the tax benefit? Yes, you are right. You will get the tax benefit. You can show this investment at the time of filing ITR and can claim a tax refund. Hope you will now be able to submit your proof of investments with ease. If you have more questions related to investment declaration or tax planning, then you can refer to the links given in the description box below or leave us a comment. We'll get back to you shortly. Don't forget to like, share and subscribe to our channel and stay tuned for more such informative videos. Thank you. Bye-bye.